attention over to the markets. This week, Bryce was joined by the president of Global Commodity Analytics to discuss the latest trends in the markets. Here's their conversation from Thursday morning.
Joining us this week to give us his thoughts on the grain complex is Mike Zuzolo, the president of Global Commodity Analytics. Mike, it's good to see you. Thank you for the time.
Thank you, Bryce, for having me.
Of course. Let's begin our discussion here talking about data. We'll start on the U.S. side with the USDA World Agricultural Supply and Demand estimates that came out midweek. We've also got some other data coming from elsewhere. Let's start on wheat. What did you see USDA do during that first report with WASDE? What piqued your interest?
Yeah, like they did last month, the USDA came in and cut the world stocks to numbers by taking major exporters down in production 6.5 million metric tons. That included Europe, that included Russia, that included Ukraine, some pretty big players when it comes to the U.S. wheat market, Bryce. And with that change, as it's a second month in a row of seeing some production number cuts on a global basis, we remain at a 10-year low on world wheat stocks to use. This month, however, USDA jumped in there and took our exports up 25 million bushels. They also, very surprisingly, and I don't think has been traded yet in the marketplace yet, has come in and taken the average price for 24-25 wheat from $6 all the way up to $6.50. So 50-cent jump in 1 month. That is a big jump. I can't tell you how many years it's been that I've seen a 50-cent jump in the wheat price for the United States from 1 month to the next, but I will be digging into that because I think that really does open up the door on these weather supply driven issues we continue to see. I think it really does two things: open the door up to another move up in terms of weather related rallies if we continue to see weather be prominent in the grain complex this summer in the northern hemisphere. Number two, I think it comes into a point where the floor maybe is put in the wheat a little bit more. So I think that's a key thing, that wheat is still a major player here, even with harvest pressure and a negative seasonal. I think the wheat still is a major player in the grain markets.
All right, let's shift over to corn and soybeans, Mike. We look at what USDA came out with WASDE. Really no big changes as I saw it on the corn front. But on soybeans, I think there's this continued expectation from the trade and elsewhere. We continue to see some adjustments and USDA not making those, right?
Yeah, that's exactly right. And I think this is where wheat is important to me because I think it can be a playbook for the corn market on a global scale, i.e. South American production, I think really needs to be chopped down. Brazil in particular, who is our major competitor on the corn side of the equation right now, I think the 122 corn production number that USDA kept us on track with in the WASDE numbers is too high. I'm at a 115 number. CONAB, the official agency of Brazil, came in the day after WASDE and said that they're going to raise their number from 111 and a fraction to 114 and a fraction. So I'm very close to CONAB. I feel very comfortable with that. That's still 7 to 8 million metric tons that I think USDA is too high. And so we're like the wheat stocks to use, corn stocks to use globally, now continuing to drop another 0.2% on this current report. I think it could drop further, and that drives us back to the lowest levels since 2012, 2013. And I think that's a key element, and I think it really raises the bar, really makes me wonder how nervous the managed funds are in terms of their positions, makes me wonder how short bought the commercials are right now.
Well, as we look at the big picture of the grain complex, I imagine sitting here mid-June, the three big things moving forward are weather, weather, and weather. What am I missing?
I think the crude oil and the dollar is an important piece of the puzzle as well, because the sticky inflation that we continue to see occur in this market and keeps the Federal Reserve from cutting rates. Historically, if that sticky inflation sticks around, it tends to drive the crude oil market higher, and that's especially if we have a decent global demand pace and world economy, which I think we do. There's a lot of traders worried, Bryce, about the deflationary impact and pressures of China and their lack of buying in the grain and oil seeds. You don't have to worry about that as much as if you have the weather market coming, and if you break the dollar. Soybeans is a great example because we're trading a dollar that is nearly as high as it was back in January of 2023 against the Brazilian currency. So that's a natural weight against us. and keeps the pressure on us to keep our prices lower. And I think if we could get the dollar to break on some more good macro news, that would really open, I think, the door up for some crude oil support.
Quick word on the Fed, you brought it up, but seems like there's less and less optimism that they will have multiple cuts to the interest rate. Your thoughts on that?
I think the Fed's going to have to come around and cut this year in the calendar year 2024. Anecdotally, I'm hearing a lot more people losing their jobs. I think the debt load is getting too strong. The one thing that keeps us elevated in terms of feeling good is the stock market. So it would only take a 10 or 20% correction in the stock market, I think, to wake this market up to the idea that the Fed's got to move. So one cut, I think, in 2024 is a must. If you ask me, Bryce, two cuts would not surprise me at all.
Couple seconds left. Just want to get your final thoughts. What else is on your mind for these ag commodities?
You know, the big thing is to watch, and what we've talked about today is watch for your feed needs and locking those in if you're livestock, and watch for your diesel and your fuel needs for the fall if this energy market wakes up.